for joining us for the Greater Houston Partnership's first workshop, Getting Back to Business. And this first workshop is on recovery and rebuilding after the flood here in Houston. And I want to welcome our kind of in-studio audience here, and we also have an online audience that's connecting with us this afternoon, and look forward to be able to present you some quality information today. This morning we did get to talk a little bit about the financial assistance that's available to companies that might have been impacted by the storm, and also some counseling services that are available and out there. And we also have our Business Expo, where we have service providers that have services that they are rendering and offering at this time. Our next panel this afternoon, starting now, is on legal and insurance. And as we all know, those are some important things. Insurance, anyway, is important things to have prior to a storm. But we will certainly talk about what you need to know now, what you need to file perhaps, and what you need to be aware of, and some of the legalese surrounding that. But also for the future, let's look at what those opportunities are in the future to make sure that we have plans in place and that we've reviewed all the materials. Again, some quick housekeeping for everybody. If you have not received a parking validation, you can do that from our front desk area over here. And we are holding the Q&A session. We're going to change it up a little bit, and we will allow questions for our panelists during this portion of the presentation, so we won't break out afterwards. We can offer that. Because we are live stream, we're really only going to be able to capture the speaker. You won't be on camera here in the audience, and we'll ask the speakers to repeat your question if you do have any questions at the time after they've spoken. So let's get started. We have a great panel today, and thank you again for joining us. I know you all are very busy in the insurance industry right now and legal. I've got Loretta Cross as the Managing Director for Dispute Advisory and Forensic Services at Stout, Risus, Ross. Chuck Vieau is the Area President with Hub International. And Keri Brown is here as a partner with Baker & Botts. We are so very pleased. I know when we surveyed the Greater Houston Partnership members right after the storm, they came up with several key areas that they wanted to hear about in terms of recovery and rebuilding services, and so we're bringing those to you today. So Loretta, we're going to start with you, and then Chuck and Keri afterwards, if you want to follow and come right up to the podium after that.
Thank you, Keri. Thank you guys for having me here today. Let me first tell you who I am and who Stout is. I'm a professional that works with companies that are in distress. And so we help them with all their financial matters when they're in distress. And I can't think of a more distressful situation than having your business or your livelihood or your home wiped out by a catastrophe. So we took the resources of our firm, and my firm is Stout. And Stout provides business valuation services. So if you had a office building that was damaged in the storm, we can help you with your valuation work. We also help put together business interruption claims, value equipment, all the things that you might need to put together the financial part of the claim. And so I'm a financial person by background. So if you look at what's happened, I'm going to give you kind of my thoughts on what you need to do from a financial perspective. And I'm not a lawyer, but I can tell you right now, as a financial person, the first thing I do is pull out my policy and read it and make sure I understand it. And if I need to call a lawyer, I think it's well worth the money calling a lawyer. And so I think, if you're like me, every year I renew my insurance, and I'm not really sure what clauses they may have slipped in or how you might have changed something from year to year. And unless you're a large enough company that you have somebody that manages your insurance for you, you may not really totally understand what the insurance policy has in it if you've just been renewing from year to year. So the first thing I do is really pull out that policy and understand it. The second thing to understand is if you've been damaged somehow is to document. You know, we've all got iPhones now. You know, you're not having to buy film. Take pictures of everything, and that goes to show, you want to show where the water is when you see that there's water. You want to take pictures of where the water level was. You want to take pictures of anything that might have been in the water. I mean, really and truly, you can't have enough photos to show what happened with the damage. And, you know, it doesn't stop there. If you have to spend some money, document it. Again, you know, if you go to the store to buy bleach and you pull out your $10 out of your pocket, keep the bleach receipt. It is so hard to go back and reconstruct what you've had unless you just put together a system where you keep the documents, and keep it all together so that it's easy to deal with. Because when you're in a crisis, you're not always thinking about, am I keeping this receipt or am I doing that? But it's going to be very hard to get reimbursed if you don't keep that. There is enormous pressure that's on these insurance companies. So if you look at what's happened, besides Harvey, I mean, the devastation with Harvey, now they're dealing with these other storms as well. And so you look at this, making the insurance adjuster's job easier. If he says he needs 5 things, get him the 5 things. If he says he can meet you on this day, if you miss that appointment, it may be hard to get him to come back by. I think, you know, you need to help him help you. And I can't say that enough in this situation, because there's so many people that the adjusters are trying to get to. And I know that it really helps to get in line, to have the repairs, to get your first check. So please, you know, if something has to happen by a deadline, you have to be your own advocate for these things so that you can help yourself get through this. And, you know, I think I've worked with clients all my life, and sometimes the client says, well, that's stupid. Why should I have to do that? You know, like, let's say you're going to the bank and you're asking for a loan to help you with some of the recovery efforts. And you renewed your line of credit six weeks ago even. And you said, well, I gave them financial statements before. Look, you have to redo it. It's a new underwriting package. You know, you just, you know, help yourself, help them help you. So you're going to need to, you know, use every tool in your patience box with this process, because it is very frustrating. Use professionals when you need them. And so if you believe, you know, if you had a manufacturing facility and all your inventory was damaged, and you think it's a sizable number, get an appraisal or do something that will allow you to very comfortably document what the cost of that inventory is. And the cost of that inventory may not be what you record in your books and records. So you need to really think about, how am I going to document this? And again, that's back to document. If it's a piece of machinery that's been destroyed and it was in place, it's not just the cost of what you paid for the machinery. You need to get somebody professional that can help you with valuing that piece of machinery and getting it replaced. So get the kind of help you need depending on what the size of the loss is. So call a lawyer, get a lawyer involved, call your insurance agent. You know, you really need all those resources to help you get through this. And you know, if you're dealing with federal insurance, I know this goes without saying, but you need to say it again. This is coming out of your patience box. If it says you have to check these 5 boxes and you think that they don't make any sense, you still have to check those 5 boxes. So call your attorney, call your agent, figure out how you're going to check those boxes, but you need to fill it all in, or you could be in risk of not getting what you're entitled to. So those are just some kind of key takeaways as a financial person, what I would tell you to do. And, outside of insurance and legal, if you owe money to the bank and you've been damaged, you need to call the bank and tell them, hey, this is what's happened to your collateral. You need to do all of those things so that you're not hiding anything and you're making sure that everybody's on board with your recovery efforts. That's my little ad there. So on top of that, and these insurance people are going to tell you, but I'm going to real quick say, you got to give notice, and they'll tell you how to do that. You've got to prepare your proof of loss, and you've got to assist the insurance company in the investigation. And third, if you've got damage, you need to mitigate, and that's really important. So let's say I have a rental house that was damaged, and, I'm just going to get the check from the insurance company. I may just, see if there's a buyout program. I don't want to repair it. Guess what? The damage will get worse if you don't go in and do certain things to mitigate the damage now. And so those are things you have to think about, even if your plan is, I don't really ever want to deal with this piece of rental property again. So you have to be cognizant of what your responsibilities are. Now, one of the reasons they invited me to come talk today is because my group would be the group that would help you with business interruption insurance or business interruption claims. And so I'm going to be the bearer of bad news and maybe the bearer of good news for some people. But the bearer of bad news is business interruption insurance, you really have to read your policy. But if, for example, it's a part of your general liability policy and your general liability policy doesn't include flood, then it may be that your business interruption insurance, you don't have business interruption insurance related to a flood. And that's really scary to me for the city of Houston, because that makes it even more important that you look at what you're doing to protect yourself as a business in this distress situation and how you might mitigate your losses and work with all the people that are stakeholders in your business, including your lending institutions, your shareholders, your somebody might have given you money on a note payable, how you work with everybody to make sure that you're protecting the value that's there for them and for you. So with business, but I'm still going to give you some information with business interruption, and so you can understand what it is. So a business interruption claim, first of all, as I said, it must be related to the insurance must be related to what caused the loss. And so if that's the case, then you would get to replace the income that would have been if not for the storm. And so what that means is if you had an apartment complex that you owned and it was 60% occupied before the storm, then it would help you replace the income on a pre-tax basis. So it doesn't cover post-tax. So you're going to have to pay tax on this. On a pre-tax basis for what you would have generated in income but for the storm. And so this is important to understand. So but for the storm, you would have gotten... you had 60% of your apartments leased, and you can't say, well, if it hadn't been damaged in the storm with all the other places that were damaged, I could have 90% occupancy and have more income. No, the insurance doesn't do that. It says, but for the storm. So you would only be able to claim what you would have had if the storm hadn't happened. In the same breath, the insurance company also can't say, hey, let's say you were a hotel that was connected to a convention center. They can't say, oh, all those conventions were canceled, so you didn't have this income coming in. It would have been canceled. They can't do that either. So it's really but for the storm. There's some really good examples of how this kind of insurance works. If you go to the American Bar Association, and I'll tell you what, I'm gonna. It's like about a 4 or 5 page primer that I can give to the partnership and that they can have out there that they can distribute to you. But it's a pretty good primer on how this works and what is covered and what is not covered. A couple of other just last-minute points that might help people here related to what has happened in the storm is there is something called contingent business interruption insurance. And I think this is really important to understand. So if you weren't damaged by the storm, but somebody that was a key supplier for you was damaged by the storm, let's say you got 90% of your product and you had a contract to that plant that had the fire up in, I can't remember, just north of town. And I think everybody saw it on TV, in the chemical plant. Crosby, yes. So if you got all your supplies from them and all of a sudden you couldn't get the supplies you needed to do your own manufacturing, then that would be a contingent business interruption. And if your policy, for example, covers fire, and that's determined to be fire that caused the ultimate damage, then you would be able to get contingent business interruption insurance. So you need to look at what's happened to your business from a really kind of a critical eye and see whether or not there's something that you can recover that direction to. So that just gives you a little taste. I just want to go back and say what I think is the most important thing, and that is work with your stakeholders, get the help you need, go to attorneys, get the valuations you need, go to your agent, really work with the adjusters that come to see you so that you can get your claim paid as rapidly as possible.
So again, if you have any questions for the panel, we can take them all at the end of the session. Thanks.
Get my notes page set up right. So appreciate everybody being here in the audience and online. My name is Chuck View. As Keri introduced earlier, I'm with Hub International. I run the Houston region for our organization. Hub's a full-service broker. We do benefits, business insurance, personal insurance. We have customers throughout North America, about 400 offices and 11,000 employees, of which about 250 are here in the Texas market here. So when I was invited to come and participate in this panel, began to think about, had some guidance from the partnership on things that they had some feedback on and some folks might want to talk about. And so I began to think more about that and then develop sort of a myth concept around some interesting things that our clients have learned and what hopefully might impart some wisdom with you around the concepts of property coverage, flood, business interruption, contingent business interruption. Loretta mentioned that, and around reporting claims. And maybe this will be new, maybe this will be a rehash of old information, but we'll just work through it together. Myth one, I've got property coverage, so automatically I have flood coverage, right? By just quick raise of hands here in the room anyhow, who sustained some damage in the business or personally? Yeah, okay. Couple folks. Really sorry. My heart goes out to you. I did spend the last several days after the storm working with some folks from our church, helping out a lot of people, and it's heartbreaking. Everybody's got a really unique story, but you go down the row of any street, and it's just lined with debris. So my heart goes out to y'all. But myth one, I've got property, so I automatically have flood. There are roughly 80 different commercial insurance markets between the U.S. capacity, Canadian capacity, Bermudian, and London. And that is truly just a myth. Not every property insurance company out there offers flood coverage automatically. In fact, one of several of our clients have learned that kind of the hard way, and we've advised them on the front end of that, but now we're going back on the back end, working through that. Property coverage is something that has a variety of different components in it. You think about tornadoes coming through. You think about fires incubated in a manufacturing facility or in a retail office space, and then that causing damage and then having coverage for that. But flood coverage is something you got to really pay attention to inside the policy. It could automatically be excluded, and if you've got the right agent relationship, you should be able to go out and obtain that coverage with the right suite of insurance carriers. And that's just in the traditional property sense. Other ways of obtaining flood coverage through the National Flood Insurance Program. My family and I live just outside the 500-year flood zone up in the Woodlands. Some live inside of it, some live inside the 100. It's a small price to pay to have flood insurance. We spend the $500 a year roughly for our homeowners policy. It gets us the minimum $250 for building and $250 for contents, excess of some nominal deductible. And that's on the personal side, but it's worth it. Peace of mind. I sleep well at night. My wife's happy. Things are good in our family just by spending that little bit of money, so to speak. Commercially, the NFIP also addresses businesses on a commercial front. So talk to your agent and broker about National Flood Insurance Program. Talk to your agent and broker about making sure you have flood coverage inside the property policy for your facilities. They will all be rated differently, and the prices vary. You know, what I talked about with my home isn't going to exactly be the same price for somebody who is ground zero in Harris County, okay? Hurricane Ike came through a few years ago and pushed the rating methodology for property insurers way out to Conroe. So Montgomery County is sort of the bandwidth from the coastal line in terms of higher risk categories for insurance carriers. And then if you want excess and flood insurance above that, there's this whole concept of excess and surplus insurance marketplace. So you can talk to your folks, your agent or broker, about going to that market. Just be prepared as you get engaged. As Loretta pled with you to be more engaged, it does cost money, so you have to weigh the pros and cons of that. Myth 2, accessibility issues, right? We had a lot of accessibility. If you paid attention to the local news, you saw parts of 610, parts of I-10 and 45, neighborhoods, etc., there's real accessibility issues around getting into your community, getting into your business. Accessibility issues don't necessarily trigger business interruption from a flooding standpoint. In the manufacturing sense, that's traditionally property damage. Property damage precedes a true business interruption claim, or in a professional services environment, maybe you lease office space and so some damage to the office space. So you got to pay attention to those triggers. Quiz your agent about that. Having said that, one thing that can be negotiated into the policy potentially with the right insurance partner is something called ingress and egress coverage. And so there is going to be possibly a nominal sublimit inside a property policy that will facilitate some sort of ingress-egress coverage. So although on the one hand I say accessibility does create issues for coverage, if your broker's doing the right thing for you, you might have some ingress and egress coverage in there, and that can help supplement the business interruption claim and the contingent BI claim, because we're very much in a vertically or horizontally integrated business community where one business relies on many others, and so as Loretta pointed out, the contingent BI is really important as well. Myth number 3, I've notified my agent, whether it's homeowners or business-wise. I've sent my claim on to the agent, right, Keri? Sent it on, I'm good. I've noticed the insurance carrier. If it's State Farm, Allstate, maybe that's true because those are captive organizations. But if you're working with someone like a Hub or one of our competing firms out there, we serve as your representative. And so notifying us does not automatically mean the carrier is notified of your claim. And so see the claim through the process. Talk to your agent. Have you notified it? Show me written confirmation that it's been notified. And when to notify. As Loretta pointed out, gather all of your information. Get all the data points together, and then get it in, submitted as soon as practicable. A lot of these types of policies, if it's general liability or other types of liability policies, they can be claims made and reported only versus some of your property, which are occurrence-based in nature. And so it's really important to make sure you gather all the data, or as much as you can, get it to your agent or broker, and have them get it into the insurance carrier. So everything, or as much detail as possible, and get it reported as soon as possible. I would say from a kind of a planning preparation on the back end, kind of looking into the future after having lived through what we've just lived through, there is a whole suite of disaster management and recovery services our organization offers. We've got about 50 professionals in Hub Risk Services. We have shared some information, I believe, with the partnership on what to look out for, pitfalls of nefarious characters kind of come out of the woodwork, and what to pay attention to. Check the partnership website for that information, or feel free to approach me in the sidebar over there to be able to relate what information to be aware of in the planning and recovery stage. I think the takeaways, the to-dos, Loretta already hit on it. I was going to echo it. Take the time to understand your insurance program. You don't need to read the policies per se. I can't believe I just said that, but at the risk of getting too much in the weeds on the insurance language, you can get to fall asleep on that. But sit with, what I would echo is, sit with your representative, your professional representative that knows this stuff. Sit with that person, take an hour or two, or extend it over a period of time, and have them explain to you where you've got the coverage. Map out in your own mind your business risks. Who do I do business with? Where am I physically, geographically located? What exposures do I have? And if you sit down and map that out, and then frame your insurance program around your exposures kind of on a weighted risk basis, what's my vulnerability to that, you'll have much more peace of mind. You may not buy all the insurance in the world that you need or could use, and that's okay. But at least you got peace of mind about what you know what you know. And you've kind of peeled back the onion on some things you don't know. So take the time to understand your insurance program. No question is too inconsequential. Can't tell you how many times I've sat with customers and they said, this is not a very good question. Well, I don't know. How do you know unless you ask? So don't be embarrassed. No question's too inconsequential. Ask yourself, your management team, your colleagues questions about our preparedness, about our state of our insurance program, and then ask your agent or broker to make sure you got coverage in your policy. Learn from this and be prepared for the future. This hopefully will be one of that every 100 years or 500-year types of storms, but you definitely need to be prepared for what could happen in the future, right? I mean, have if it's at home with your family or your pets, have a mini disaster recovery plan. Where do I drive out to? How do I get out of my neighborhood? Or if it's your business, think of all the constituencies you need to involve. Internal leadership structure, the vendors you do business with, your employees, your creditors, your bank. Make sure you got accessibility to capital still, and then all of your policies of insurance and the different folks that you're going to need to notify post-event. From the Thursday that the hurricane made landfall in Corpus, I think, forgive me if the dates are wrong, through the following Thursday, the next week, we spent every morning at 8:30 in the morning doing disaster planning meetings. One was accountability for me and all of my staff in the office, and making sure everybody was safe, even if they had been harmed in some way by flooding or loss of cars. Two was making sure our customers were taken care of. And I was constantly texting with a variety of different, personally texting with a variety of different my customers, and my team was texting with their customers to make sure their customers had accessibility to their office, what types of claims, just letting them know we're out there and we're taking information in. And then 3, kind of the state of the Houston climate. What roadways could we access? Everybody knows Beltway out in the west side of town had some flooding, and our office happens to be in West Chase, so we worked from home for the past couple of weeks until the city got in there and took care of it. But we're a beautiful city, we're a resilient city, and I would challenge anyone in other states or cities to rise to the level of the occasion that Houston has in the past 3 or 4 weeks. Proud to be associated with everybody here. Thank you.
Make sure this is working. Hi, everyone. My name is Keri Brown. I'm a partner at Baker Botts, and my day job is transfer tax controversy work, which means I work with high net worth individuals in gift and estate tax issues. But my side job, which was more of a full-time job since Harvey has hit, is that I'm also chair of our Houston office's pro bono committee, and that has been my disaster legal aid training over the last 3 to 4 weeks. So what I have for the people who are here in the room is I've got the materials in the PowerPoint presentation, which touch on legal issues affecting small and medium-sized businesses. What we also have, and what I think will be made available on the website, 2 more resources that the firm created and that are available on our website. The first one is what we call very creatively the Harvey Crisis Response Guide. This was created effectively to deal with the types of questions that individuals may have, homeowners might have in dealing with this. What is FEMA? How do I apply? How do I deal with flood insurance? What are my, if you were displaced and your children were displaced, where can they go to school? So it's a helpful kind of soup to nuts for individuals who were affected as a result of Hurricane Harvey. And then the other handout, it's called the Legal Line FAQ, and this one is just a series of questions and answers organized by category of just the types of questions you might have. We have a Q&A in there about buyouts because everyone was asking about buyouts. We have a Q&A about flooding because you're in the because you were flooded when the reservoirs were released over in the Barker and Addicks as reservoirs. So those are there. The PowerPoint presentation I think is in your chairs, and then the other handouts are outside, so you can grab those when we're finished. So with that said, move into what we're talking about today. So first we'll talk briefly about contracts. And the contracts portion really deals a lot with force majeure issues. And then tax relief, you probably are aware that there has been some relief from the IRS in dealing with your business and personal income taxes. Employee benefits are ways that you can help your employees, and the ways that your employees can help also, and to the extent possible, be eligible for a deduction for that assistance. And then finally, just some personal tax planning opportunities, because you have to have a silver lining over the rain cloud of Harvey. So we'll save that for the very end. So just start with contracts. So the first thing is, just as Loretta and Chuck talked about, read your policy. If you have a contractual issue, read your contract carefully. The first thing you want to consider is, are you providing or receiving services or goods under a contract? If so, has your ability to perform under that contract been affected? And if so, is it affecting your ability to fulfill your contractual obligations? And if it is, then consider how you may be able to obtain relief. One of the obvious ways that you might obtain some relief is through invoking a force majeure clause. Most contracts will have a force majeure clause in them, and it's difficult to think of a more classic example of force majeure than Hurricane Harvey coming in here and dropping 52 inches of rain over the course of 4 to 5 days. So read it carefully. Do keep in mind, force majeure does not excuse all performance. It only excuses that performance that is actually affected by the act of God. So it only excuses, for example, if your warehouse flooded and your inventory is flooded and you can't deliver your inventory, maybe force majeure applies there. Doesn't necessarily affect payment obligations. This is somewhere you need to read your contract and know what your obligations are. So if you're looking at force majeure, first you want to make sure that you comply with deadlines. There should be deadlines in there. You know, within 7 days, 14 days, you need to notify the other party to your contract that you are invoking force majeure and the extent to which you are invoking it. You also want to make sure, as I mentioned a minute ago, make sure that force majeure actually applies here, and that the reason why you want to excuse performance is related to the flood. And then make sure that you're complying with your notice requirements. So that includes deadlines. That includes if you have to also notify if you have a subsidiary contractor or if you have a bank who's providing funding for this. Make sure you're complying with every step along the way. Okay, so you also want to make sure the reason why you can't perform is are you arguing force majeure, or are you the recipient of a force majeure claim for something that is desk work as opposed to manufacturing work? So an example there is you have an engineering project and it's desk work. I'm married to an engineer, so it's okay for me to include engineers in my scenarios. So you have a civil engineer who was supposed to have plans turned in by a certain date, and they weren't able to have them turned in. And they say that it's because of Hurricane Harvey and things were flooded. Well, this is desk work. It's not as if your manufacturing facility shut down. So does force majeure actually apply here? The argument you probably would get back is, yes, my office was in the energy corridor, the office was flooded, or I couldn't get there, or have you seen the highways? No one could get to work to get this done. So keep in mind, just because it may not at first glance be applicable to a force majeure allegation, it could be. So ask questions. If you do get that question, ask them exactly why they think force majeure applies in that situation. Again, just because it bears repeating, make sure you're complying with your notice requirements. If you fail to comply with notice requirements, then you could fail to properly invoke force majeure, and then you are in more trouble than you would otherwise have been in. Again, force majeure is only a temporary excuse for performance. It does not completely void the contract. It does not say you no longer have to perform at all. It is only temporary, and you need to use your best efforts to get back up to speed. Make sure that you're running your business with the same urgency you were running it before the hurricane came through. Make sure that you are mitigating damages to the extent that you can. So again, if it's a manufacturing scenario and the warehouse was flooded, do you have dehumidifiers in there working? Have you already torn out all the sheetrock to the extent you can? Are you getting things dried out so that you can move on with what you need to do to comply with your contracts? Document everything. That seems to be the refrain of today. If you're talking to your insurance people, document everything. If you're talking to your valuation people, document everything. Document everything here. When you contact the other party to your contract, make sure you do it in writing or in some form that will prove that they received that communication. If you have a phone call, make sure you include the date, the time, who you talked to, and what you talked about. If possible, follow up that phone call and just say, I'm going to send you an email that summarizes what we discussed. Will you just read it, confirm that we discussed all of that, and everything I say is generally correct, so that you have that evidence. Because at the end of the day, you don't want to litigate. I'm a litigator, but I sue the IRS, so that makes it fun. You don't want to have to go into court if you can avoid it. There's already going to be plenty of litigation involving Harvey. Stay out of court if you can. Do what you can under your contract, and keeping good records of everything so that you can help avoid having to litigate if you have to. Final comment on force majeure and contracts is consider whether this is a planning opportunity for future contracts. If you review your contract and there's not a force majeure clause in there, do you want one in your next one? If there is force majeure and it says that force majeure may apply, but you still have to satisfy your payment obligations, in your next contract, do you want to consider whether that payment obligations requirement might be amended? So think about, as you look through the contract, something you might want to change now that you're actually in the thick of it and having to deal with the ramifications of a force majeure clause. It's boilerplate until it isn't, right? That's it. So see if you want to have your boilerplate fixed now before the next hurricane comes along. Okay. All right. So tax relief for a few minutes. This is a little bit closer to what I do in my day-to-day job. At least it's tax related. Okay. So most of you probably are aware. I do have the details in the PowerPoint. These slides do have a lot more words on them than the prior slides did, simply because there are lots of dates that you need to be mindful of, and tax issues are, Congress drafts them. They're very complex. It takes some time to understand them, and you can't just summarize them very easily. So we have a lot of words here. All right, so tax relief. You have an automatic extension of certain deadlines to January 31 of 2018 for individuals who either reside in or have business in or have a business in an affected county. And the list of affected counties is there. This also is widely available on the IRS's website. So to which returns does this automatic extension apply? Is your next question. For your tax returns, if your original or extended due date of your tax return is on or after August 23rd of 2017 and before January 31st of 2018, then you have until January 31st of 2018 to file those returns. So if you are like me and your personal 1040 was on extension to October 15th, you now have until January 31st to file it. File it now if you want. Hold off if you want. Just make sure you do file it on or before January 31st. And for this relief, it is automatic. You don't have to request it. It's just automatic if your address is in one of the affected counties. So individual, corporate, estate and trust income tax returns, your partnership, S corporation tax returns. If you happen to have an estate tax or gift tax or GST tax return that was due within this time, it's been automatically extended, as have your employment and certain excise tax returns. Your due date for your estimated tax payments also has been extended. So if you had a payment due on September 15th, you didn't have to pay it. You don't have to pay that until January 31st of 2018. Again, nothing's stopping you from paying, but if you want to hold on to your quarterly estimated taxes for a little while longer, you can do that. It applies to your third and fourth quarter estimated tax payments, and if you make your payment late but before the extended deadline of January 31 of 2018, then you will not be subject to a failure to pay penalty. So, moving to payroll and excise tax, this applies more to the businesses, of course. For payroll and excise tax, the deadlines for filing were not extended, but the penalties for deposits, if your deposit was due, your payroll tax deposit was due between August 23rd and September 7th, your penalties were abated so long as you made your payment by September 7th. So that time has passed. Hopefully everyone took care of that and there's not an issue. But if you didn't know about it, now you know. These rules on automatic extensions do not apply to information returns. So it doesn't apply to any of the series forms or the forms that are listed on the bottom of this slide. Okay, casualty losses is something that affects both individuals and businesses. A casualty loss is a sudden destruction or significant depreciation, significant diminution in value of an asset. It is not something that was caused by ordinary wear and tear, not something that you just depreciate at 10% every year. This has to be sudden. It has to be as a result of something like, say, a hurricane coming in and flooding you. If you are subject to a casualty loss, you have an election to deduct your casualty losses either in your 2016 or 2017 returns. The general rule is you can only deduct your casualty losses in the tax year in which they were incurred. This is an exception to it. Calculating your casualty loss is complex. It very generally is related to your basis in the property that was damaged or destroyed, reduced by the value of any recovery. So insurance proceeds or any other recovery will reduce that. And again, that's a very basic and not everything you need to know about casualty losses, but keep in mind there are issues there. Sure, the question was if I could repeat the general rule about how your casualty loss is calculated. Very generally, and subject to a lot of rules, it's going to be your basis in the property reduced by the amount of any recovery that you receive for the damage or destruction of that property. So if my basis is $100 and my insurance company paid me $75, well, then my casualty loss there might be, subject to those caveats, $25, but it's certainly not going to be $100, or really not going to be anything greater than $25 in that case. The rules are different for calculating casualty losses for businesses as opposed to individuals. And I have in the Legal Line FAQ has, I think it's the very last FAQ in there, it has very briefly steps 1 through 4 in calculating casualty losses for individuals. And then I believe I have with me, but it's not yet been published, if someone wanted to look at it, I have the instructions on how to calculate casualty losses for businesses if someone wants to look at that afterwards. The key takeaway from there is know that casualty losses may apply, but also talk to your tax advisor, because it is very complex and it's not something that you want to mess up. But have it in your mind to ask your tax advisor about casualty losses. Okay, and then the final slide on tax relief before we move to employee benefits are Section 1031 exchanges. For Section 1031 exchanges, you may qualify for certain relief. One of the requirements is that you relinquished your property that was going to be subject to your 1031 exchange on or before August 23rd. And so you relinquished your property before there was a disaster declaration, and then there was a disaster declaration, and someone in the chain now has been affected by the hurricane coming through. And this extends you have a 45-day identification period for the property you're going to exchange, and then a 180-day exchange deadline. That's extended by a maximum of 120 days if you have someone that's been affected. And the definition of it keys on whether you have difficulty in satisfying the requirements. And there's a very broad definition of difficulty. It's basically if your business was in this area in one of the counties, if you lived in one of the counties, if someone on the other side lives in one of the counties, very broad and designed to give relief in almost any circumstance you might actually think that you have a chance for relief there. So extends your 45 and 180-day period by a maximum of 120 days. What it does not do is it does not extend it beyond the due date for filing your tax return for the year of the transfer. There are also, again, restrictions, other things you need to do to take advantage of the relief. Talk to your tax advisor about this. On the PowerPoint, there's a link to the IRS press release on various types of tax relief that have been issued by the IRS. Okay, now moving on to employee benefits. First, talk about 401k withdrawals, and then I'll get into 401k plans. 401k loans. For 401k withdrawals, typically the circumstances under which you can make a hardship withdrawal are fairly strict. Those rules have been relaxed substantially as a result of Hurricane Harvey. If you're in the disaster area, or even if you're outside of it, which I'll get to in a minute. And essentially, if your employee comes to you and says, I need to make a hardship withdrawal because I was affected by the hurricane, you can allow that unless you have reason to know that they are not being truthful and they weren't actually affected by the hurricane. But all they have to do is come to you and say, I was affected. And if you don't have reason to believe otherwise, you can allow a hardship withdrawal. If an employee takes a withdrawal, they are still subject to taxes on the withdrawal. They are still subject to the 10% penalty. And as I mentioned, while it is typically rather difficult to obtain the hardship withdrawal, it's not if you were affected by Harvey. There's also no restriction on recontributing to the plan in the next 6 months after the withdrawal. That's typically a restriction that doesn't apply here. And you can request it even if you're outside of an affected county in certain situations. Those situations include, let's say, for example, you have family members in Dallas and they want to withdraw from their 401k plan so that they can send money down to their son or daughter who's in Houston whose house was flooded and they need the money. You can do that. So up in Dallas, mom and dad can go and say, I was affected, I need a withdrawal, and the business owner can allow those withdrawals. course, the next question is, do you want to offer this if you are the business owner? You don't have to. What we're seeing is some businesses are taking a wait-and-see approach. They want to see how much demand there is for allowing these withdrawals on the much more lenient requirements, and they haven't yet decided whether they're going to allow withdrawals. You don't have to allow withdrawals just because an employee asks, but you can always offer them to the employee. Okay, so for loans from your 401k, similarly, the rules there are relaxed. Again, no restriction on recontributing to the plan within the next 6 months. The defaults, though, are still subject to income tax and your 10% penalty if they default on their repayment. And here's another exception. You typically have to have your plan documentation allowing for loans before you can actually allow a loan. You don't have to in this case, so long as you act reasonably and in good faith to assemble the missing documentation. So you can go ahead and, if you're the plan administrator, allow the loan, get all of your documents together and get them submitted to the IRS so that it's taken care of. All right, you can offer your withdrawals or your loans even if, this is echoing what I just said, even if your documents don't include hardship withdrawals or loan provisions. You must amend your plan. The general rule for that due date of the plan amendment is January 1st of 2019. So you have a little over a year to do that if that's the case. And it extends not only to 401k plans, but also 403b, 457b plans, IRAs, and some qualified defined benefit pension plans, but not all pension plans. So keep that in mind. Most pension plans, as I understand it, will not qualify, but some will. And the relief ends on January 31st of 2018. So that's the deadline for offering this form of relief. And then you, as the employer, you have another 11 months to amend your plan if you need to amend your plan. Okay, let's shift to the types of employee benefits that I had no idea existed before Harvey came along. Section 139 payments. This allows an employer to make a tax-free payment to your employees for certain disasters. Harvey's one of them because it's a federally designated disaster. And the payments you make to your employee are not taxable income to the employee, but you get the deduction as the employer. So it's really the best of both worlds. It's called a qualified disaster relief payment. If you look at section 139 in the code, you see qualified disaster relief payments is effectively, I think, what this section is named. The important thing to remember is you can only offer this tax deduction qualifying assistance to the extent that whatever you are helping them pay for is not compensated for by insurance or otherwise. So if you want to offer this relief, the best practice here would be, let's say, for example, it's a deductible. So your deductible, of course, isn't going to be compensated by insurance, and FEMA, let's say you have a $20,000 house deductible, and FEMA is only going to kick in $1,000 for house costs, not housing costs, because that's a different category. Then you could conceivably offer your employee $19,000, and it's tax-free to them. They get to use it to satisfy the deductible. You made a very happy employee, and you've garnered a deduction for yourself. So it's a very easy way, if you have the funds and the ability to do it, very easy way to help your employees out and generate a lot of goodwill. So the Section 139 payments are ways that an employer can assist the employee. The other option here are employee relief organizations, and we've been very busy with our clients creating employee relief organizations after Harvey. We've had one since the early 2000s, and the way an employee relief organization works is the employees contribute. And so I can write a check for $500 to the employee relief organization, and then there's a board at my company, and they consider a grant request. So someone's house flooded, and they say, may I have $5,000 to help cover some of my deductible? And then there are people, they can't be lawyers, at our firm at least, so we have staff members who decide on the grants, and they decide whether this person gets the $5,000 they want. So good way for employees to be able to help out in the event of a disaster. The other beauty of an employee relief organization is that it is more permanent, and it is designed for day-to-day issues. So for example, we had a situation where one of our staff members randomly had to fly to California for a family emergency, and she couldn't afford to go. She couldn't afford to get the ticket, but she applied for a grant, and the firm covered the cost. They said, here's your flight, here's your hotel, go, be with your family, do what you need to do. So that's a really good asset that you can offer to your employees, and you can get those in place right now. You get donations throughout the year. You make your grants as appropriate, depending on what the members of the board decide are appropriate grants. And as I mentioned, it's not limited to certain events. So it's not only you have to show you were affected by Harvey, it can be for anything. Leave donation relief is another interesting benefit. An employee can donate their PTO to charity. So I have a day off of work and it's valued at $300. I can give up my day of PTO. What happens is my employer then writes a check for $300 to the charity that they've chosen. It's not taxable income to the employee, and again, the employer gets a deduction for writing that check for $300. So, and then lastly, hyper technical, but it's in there just so it's there. There is Form 5500 relief for plan sponsors. So if you've got a 401k or some kind of retirement plan, the deadline is extended to January 31st of 2018 if your original due date with extensions was between August 31 and January 31. Finally, personal tax planning opportunities, because you need a silver lining on the cloud. If your business suffered a financial hit from Harvey, and now it's not worth as much as it was previously, this is a good opportunity for you to think about doing some estate planning and transfer assets down to your next generation or whoever you want to inherit now while your values are low, because it will use less of your exemption. So keep that in mind. That actually is what I do for a living. So I could talk about that more after if anyone wants to discuss it. That's it for legal, and I'll move to the red slide, which means we're officially done, and I'll turn it back over to Keri.
Well, great. I know that when Keri and I first spoke on the phone, Keri, and I first spoke on the phone, and I said, can you present at this workshop? We're trying to throw this together fairly quickly. She said, well, yes, I can, but it's not my day-to-day activity. But I think it's a representative of what a lot of us have had to go through. Is we've really had to fill in a lot of different areas and get up to speed very, very quickly on important topics that are relative and related to what's going on. So anyhow, thank you very much, Keri, and it was great, and I've learned a lot from everybody here today. So if there are any questions for the panel, if not, we'll break and see you at our next session at 3. Are there any questions? Yes.
So the question was, regards to rental property, is there an income loss component to a policy, a flood policy? And the flood policy, as I understand it, is principally for rebuilding your flooded components, so there's no income loss. The income loss is more on the commercial insurance side of the world, where business sustains a business interruption as extra expenses or foregone income that they can't recoup. The world of personal insurance, you may have to buy an incremental policy. I would talk to your designated agent and scour that. My personal experience is we don't have income loss protection on our rental property.
Piggybacks on that a little bit. There wasn't many people with hands up when you asked about people being personally affected here, but I think a lot of people had either employees or colleagues that were impacted. And so, of my 20-person company, about 4 people were damaged, their houses. And so, our planned property assets were fine, but they were out of commission for like a week. And so I imagine a lot of service contracting companies really constrain their operational capacity, right? So what if, is there insurance for like on the commercial side of income protection? You mentioned that hotel example, right? But like if you don't have a force majeure in your contract, is there insurance to protect you in the event that your employees just can't get to work? And so how do you provide a service if your employees can't get to work?
So I think that's a great question. And obviously, go back to, you have to really read your insurance policy and make sure, first of all, that you have any kind of coverage that would impact that. So if your employees, service employees, for example, let's just go back to what the real situation was. People were asked to stay home. Our mayor asked us to stay home, work from home, do what we could from home. So if you run service trucks, let's say, and what your service trucks are doing is something that's not related to the storm or recovering from the storm, then I think that you would have some good thoughts to think about. Now, most business interruption policies, or even a contingent policy, have certain limits to them. So, for example, you might have to have experienced the problem for 24, 48, 72 hours. And so with a flood, oftentimes within 72 hours, the problem is taken care of. So you may not have coverage just because it was such a temporary situation. But I think, again, it's going back and reading your policy.
Great points. Yeah, there is this time element, which is more of the deductible inside the business interruption. Because the business is insured under the business interruption policy, unfortunately, what happens to the employees and the fact that they can't get into the office is, I don't want to sound cavalier in my explanation, but I think you can read is what I'm saying. But it's probably merits more discussion off to the side if you'd like to. Happy to do that. Anyone else? Other questions?
Okay, great. Well, thank you all. And we're going to break now. We have a temporary staffing workforce panel that'll come on at 3 o'clock today, and hopefully we'll see you there. If not, we'll see you at the next one. Our workshop on marketing and managing your business's reputation in a crisis will be our workshop number 2 next Tuesday. Thanks so much.